Hello traders, it is Sunday, July 14th, and it's time for our Sunday video. In this video, I'm going to review our previous picks. I'm going to do some market analysis so that we can set up our game plan for the next week. And then we're going to use a systematic trading approach to find some new trades. That's how all of these videos work. And the purpose of it is to show you, to demonstrate time in and time out how effective this trading system is and why you should learn it. Last week, a week ago Sunday, Dell was one of my bearish picks. And you can see this upward sloping trend line. You can see how the stock has not been able to advance after this big gap down. Lower high. I believe that the stock is going to take out this low with any kind of market weakness. Do we have a trade on right now? No, we do not. We are waiting for market weakness and a sign that there's a technical breach on the S&P 500. Only then, on a breakdown of this upward sloping trend line, would we take a trade. NVAX. But also, look at the chart. You can see how the stock has not been able to advance with the market. It has relative weakness. NVAX was another short that I showed you. And you can see in the course of a week, it has bounced a little bit. A lot of the stocks that have been recently pounded down caught a little bit of a bid Thursday and Friday. We're going to discuss that in just a moment. Another trade that I showed you was AMD. Now this was actually a long that I liked. You can see that even on Thursday when we had the big market reversal this week, the stock held up extremely well. Even during the Friday sell-off late in the day, the stock was able to finish decent. It's got nice relative strength. On Wednesday, I provided you with a short, and that was SLB. The company is going to be announcing earnings soon. You can see this downward trend that's established. I am looking for the stock to have a little bit of weakness. I'll be exiting the trade this week. I believe it announces, yes, on 7/19. So Thursday, I believe the company will report earnings. So this is a short for anyone that's taken it. You would need to exit, but there hasn't been any reason to take the shorts right now. Let's get into market analysis. Everything that I've been telling you over the course of the last month, please go back and verify this in my videos, is to keep it very light. Stick with day trading. Make sure that you have very short-term positions on right now. Take advantage of some of the remaining upward momentum that's left in the market. That's fine. In fact, I'd mentioned to you, basically just trade the mega cap tech stocks. That's what's been leading the market higher. But day trade them. Don't swing trade them, because the market's vulnerable to a pullback. So let's go in and take a look at what the market's doing and why my stance has been to provide you with bearish picks. First of all, let me tell you that in October, please go back and watch my videos. I was bullish, 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 telling you we are going to get a nice big bounce. This is a buying opportunity. Even though I feel that there's some little bit of weakness left in the market, I'm going to be setting you up with bullish picks because I only do these videos a couple times a week. Conditions change very, very quickly. I don't want you to be flat-footed. I'm seeing a transition coming, and that transition is going to be from a market pullback to a big market rally. So here are a bunch of long picks that you can have on your radar. Set your alerts. Be ready. But in here, do not be aggressively short. You're going to take a beating, and this reversal is going to come quickly. I feel that we're headed into the same type of scenario right now where you've got the market drifting higher on very light volume. So I would suggest that you keep your trades very, very brief. day trades. And we're able to catch some fantastic day trades right now. We're seeing two-sided market movement intraday. We've got some decent movement in here. You can see these long candles. When we see that we've got a bullish trend day establishing itself, fantastic. Get on board, ride those trades higher. But you can also see that there are lots of little tiny bodied candles as the market continues to float higher. And yes, the volume's been extremely light. So is that bearish? It's not bullish or bearish. It simply tells us that the level of conviction right now is very, very low. And that means that the market could move either way. In particular, what we should be watching for is a gap up to a new all-time high and a gap reversal that leads to a bearish trend day. So every day that we start out, if I have a gap up, I know that at some point during the course of the day, the bid is going to be tested. What's that mean? That means that the sell programs are going to run and they're going to try to hammer the bid to see what is there. Is there anything there? If there's not, the market's going to pull back. As soon as those programs run, even if they lose a little bit of money on these programs, it's okay. Because once they have identified support, they've identified that those bids keep getting replenished. They keep hitting them. It comes back. They hit it. It comes back. They hit it. It comes back. They know there is size there. Then they start bidding, and they will buy everything that they can. Those little losses that those sell programs incurred are going to be made up by the market rally. That's how the programs work. But every day in this kind of market, at some point in time, you are going to get a bid check. It's going to happen. So wait for that process, especially if you're in long-only mode, which right now the market really hasn't broken down, so it's fine to be in long-only mode if you are extremely patient. You have to wait for that dip. You have to wait for confirmation. You evaluate the dip. If it is brief and shallow, mixed, overlapping candles, that is wimpy. That tells you that at some point soon we are going to find support and the market is going to rally. That's not a strong move lower. If you start to see long consecutive red candles and the drop is deep, then you know there's a lot of selling pressure out here. This is not a time to be buying. Maybe I should be looking at shorts. Get a gap up. You know from a probability standpoint that a gap and go formation where you gap up and the market keeps marching higher, that is not a good risk reward profile because you have the chance for the market to reverse very quickly and very far, leaving you with huge losses. So what I've been doing is when I get a gap up in the market, I know the bid check is coming. I'm going to be looking to see if there are some short-term day trades that I can take on a day trading basis. If I can't find anything, I'm not going to trade it. But if I find a sector or I find a stock that looks particularly weak, I can take a short, being fairly confident that it's going to take a while for the market to find its sea legs. And all the while, that stock is going to continue to drift lower because it's already showing me that there is selling pressure, selling momentum. So that's how I'm currently trading the market. And you can see that on Thursday, we had the CPI came out. So we had CPI, the core is really what the FOMC, the Fed, is watching. They wanted to see core inflation coming in. 0.2% was expected. 0.1% is what we got. And so what happened on Wednesday was that the market rallied in anticipation of a very good number. 15-minute chart. Let's take a look at what happened this week and let's take off the extended hours. So we come in, and this is Wednesday before the CPI number came out. You can see we had a gap up. You must wait on the gap up for the bid check. So we get this red candle, red candle. We test the open, and the open holds. The high from the previous day holds. Most of the gap is preserved. Bullish hammer. Okay, I'm feeling pretty good about the market right now. Everything looks like it's shaping up well. Long green candle. Preserved. New high of the day. All right, now I got the warm fuzzy that I needed to make sure that the market has found support and that it can be moving higher. And there's your price action right in there. There's your early run higher. No, I'm not biting. No, I am not going to get long. I'm going to wait for that bid check. All right, here we go. All right, support is in place. Now the market challenges the high of the day. It's got these nice long green candles. It's able to hold that breakout. This is where I can start considering long positions, long day trades. And you can see how the market ran up Wednesday. Again, decent volume in anticipation of a really good CPI reading. So when you come in Thursday morning and you read the headlines and you go, oh, wow, look, CPI came in better than expected. And initial jobless claims, which had been running a little hot, meaning that there are more people filing for unemployment insurance. It's not good. That's a sign that there is weakness in the employment or the job sector. Okay, well, you know what? Maybe the strong employment that we've been leaning on for the last couple of years is starting to wane. But this Thursday, we had initial jobless claims drop from, I believe, 238,000 back down to 222,000. All right, that was a loss of 13 to 15,000. That's good. That means that jobs are still on track. So I've cited a few statistics in here. Let me provide some clarity. Inflation is coming down. That's good for the market. We have that job growth back. That's good for the market. So if you came in on Thursday morning going, oh my God, this was a great number. CPI looks fantastic. And look, the job scene is back. Jobs are okay. No worry there. I'm going to buy this thing because the market didn't gap up. I'm getting a bargain here. This is going to be a bargain, man. This thing's going to scream on this news. It's already at an all-time high. That's what FOMO Joe thinks. FOMO Joe doesn't worry about the bid check. No. He just piles right in because he knows that these were good numbers. Oops. Bearish engulfing candle off of the high of the day. Bearish engulfing candle off of the all-time high, and the volume was good. And then you get your stacked red candles. Here comes the bid check. This isn't a wimpy pullback. This is a strong pullback. In here, I told every member in the chat room, watch out. We have a 10P cross, a bearish cross right here. We have a bearish engulfing candle off of the high. This could be a bearish trend day right in here. About 40 minutes into trading, I posted this into the chat room. Favor the short side. And then we get this big drop in here. You can see how there was follow through selling. And once this selling ran its course, we hit support. And we had these long mixed candles in both directions. When I saw this, I knew that we're probably headed for what I call the meat grinder, where you have lots of attempts to break the market down. Every little breakdown looks fantastic. This is where you'd want to short, and then whoop, the market goes right back. Every time that you get a market rally, it looks like the market's going to bounce, and then they pull the rug out from under you. And what you get is this chop with a big range both ways, but no net movement. So this looked like a pretty decent gap reversal. But what was wrong with this? Why, why didn't we look really bearish? What would have been a more bearish pattern? So a more bearish pattern would have been if we had many consecutive red candles. Not long like this, because these solos we don't have to worry about as much because they tend to retrace. Obviously, if you get like 6 of them in a row, then you got to be very careful, because that would be a sign of very heavy selling where the market can't even come up for air, and you never get a reprieve like this. You just start seeing them stack. Okay, that's bearish. There's some kind of really big news that has come out that's got everyone spooked. Let me just take a very quick departure from this analysis. There was an assassination attempt on former President Trump. It's horrible. I would say that for either party. Going to get lots of questions on how is this going to impact the market? Well, if he had been assassinated, then the market would have sold off. And I'm saying that not because Donald Trump is good for the market and Joe Biden is bad for the market, or vice versa. I'm saying that because right now the market feels that there's a little bit of momentum, a little bit of certainty going the Republican way, so that market's starting to kind of get ready for that to actually materialize and happen. And had he been assassinated, it would throw complete uncertainty into the market. And the market operates on certainty, things that it knows. And when everything's in a flux, then the market tends to chop back and forth. And so I say that in an apolitical way. Would be the same thing if Joe Biden were assassinated. So I'm not being political about this. I'm talking about this in terms of market reaction. But even then, that effect would be relatively temporary until the market has that certainty of how things are going to proceed. Then it kind of smooths over everything and it gets back to business as usual, which is earnings, interest rates, inflation. Those are the things, economic growth, that the market really cares about, profitability. So if you look at major wars, when they initially happen and there's some kind of outbreak, especially if it's unexpected, that's when you'll see an initial knee-jerk reaction by the market. But then very quickly, it kind of goes back into assessing those internals that matter. So future cash flow, interest rates, that type of thing. So back to the market. We have this sell-off. What would have made it more bearish? What were some of the signs that maybe this sell-off wasn't going to be as nasty as the other bearish reversals that we've seen? Well, first of all, when you get a handful of red candles and then a pause and a handful of red candles, that's not the strongest pattern. You want to see smaller but more pronounced red candles. So red, 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 just leaking oil. So nothing big, nothing over the top. And what happens when you have that type of persistent selling pressure is the market can never come up for air because there are always sellers hammering it back down. There are buyers, and that's why you're not seeing stacked long red candles, because the buyers in that gradual drift lower are still thinking, well, I'm still a buyer in here. There's nothing bad happening. I'm still bidding. But eventually, as that drift lower starts to take hold, so instead of having this waterfall event, you have just a gradual drift lower. Eventually, by midday or so, buyers are going to start to throw in the towel. They can sense that the market has very strong selling pressure, so they start to pull their bids. And sellers get a little more aggressive because they weren't able to get the price that they had been able to get earlier. And so now they start stepping up their selling, and you get this parabolic move at the very end of the day going into the close, stacked long red candles on heavy volume, and then the market closes on its low of the day. That is much, much, much more damaging. And in that type of price pattern, whoosh, we would have seen follow through selling, if not the next day and the next couple of days. So instead, well, what did happen on Thursday? Well, we got these air pockets, okay? So you get the selling programs come in and they take out the bid. You're going to be flushing out some bullish speculators here as well. So there is some of that type of selling going on. But that move runs its course very, very quickly. So in about 90 minutes or so, you just get into this chop back and forth. There is no follow through selling. So buyers are still out there. Buyers are still engaged. So what happens on Friday? Well, on Friday, we had this little gap up. And it wasn't tested very long, and then we get into these stacked red candles. I saw this, and I was really watching. I wanted, the pattern that I most wanted on Friday was, give me a nice test of this low. I know there's some support here. Get that selling pressure out of the way early. Let's see a couple of pokes at it, and then let's spend the rest of the day grinding higher. That is a pattern that we could have easily gotten behind because this told me that it wasn't overly damaging. But it's not what we got. The market lifted off right away. Well, when we got into about 90 minutes of trading or so, I told everyone, listen, I'm not buying this, okay? I'm not going to be chasing this. I know a bid check is coming. I'm going to patiently wait for it. And so you get this big run up here and then a nice long red candle. Another nice long red candle. Well, what I had mentioned in here was that that's the dip we were looking for. We're not chasing in here. We're waiting for this bid check. We're waiting to see what the quality of the dip is. And I've already mentioned to you how we don't need to worry too much about these long solos. Red, 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 red. If we had that, just like I told you here, then we would need to be more concerned because then we could see that waterfall event into the close. But that we got one long red candle, a reprieve, one long red candle, and then nothing above VWAP. When I started to see the market recapture this long red candle and we get above the open, this is where I got long in here. All right, I have the information that I needed. I needed to see this. I needed to see the character of this drop. It was not very threatening. Cool. Now let's see it rebound. Let's get above that. There's my entry point. So in here, many traders would be thinking, oh my God, I missed the whole move. Oh, this sucks. And they're going to be chasing in here. They're going to be chasing in here. They're going to be chasing in here. When they get that drop, oh my God, long red candles. I got to get out, take my loss. And so now they're in a flux. They don't know. Do I buy? Do I short? What do I do? I'm so confused. Stick to your guns. Okay? Be patient. Come in. Let the action play out. Evaluate. Find your stocks. Get them lined up. Wait for the pattern. And that was the pattern that I wanted. And so now the market has tested the bid and we get this nice release higher. I bought some futures in here and I sold them up in here. Why? Made about 20 points on that trade. Because we were starting to get very climaxy in here. I mean, these are nice candles. This is a nice, strong move. I want to exit those positions on a big move up like that. I know that there's been selling pressure the previous day. I've seen it. Why wouldn't there be some selling pressure there? Was the news that good? No, not really. So why don't you take some gains, see what the market does, and then we get this long red candle off of the high. Oh, good thing I took some profits up here. So now I'm just back in evaluation mode. And going into the close, what I was looking for was for a quick bearish cycle to run with a bullish cross and the market holding right up on the high of the day, but that's not what happened. Instead, we just had this gradual 10p drift lower. Well, that's not the pattern I was looking for. I wanted a nice quick cycle in there. Then I would have had confidence buying that bullish cross, but I didn't get it. So I said, you know what? I'm done for the day. Good thing, because we started to drift lower. And this is the kind of drift lower. It's not ideal, because when I talked about the sell-off on Thursday, you want to see a series of lower highs, a series of lower lows. Ideally, when it's getting really bearish, is you wouldn't see any of these green bars in here. It'd just be red, 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 red. But when you get this type of drift, they're trying to rally it, and every attempt gets smacked down, and those offers get replenished, and then eventually that selling pressure is going to accelerate. So by the end of the day, we had a pretty nice pullback off of that high. We finished somewhere in the middle of the range on a daily basis. You can see this chart, got a little bit of a bearish hammer in here. There's your bearish engulfing pattern. What would I read into all of these days combined? Not a whole lot, okay? So we've had buying and we've had selling. And that is what you should expect to happen over the course of the next couple weeks, because we've got earnings season starting off. The banks have dominated the scene. Economic news this week, very light. We have industrial production. We've got some Fed speak, which is going to be meaningless because they've been speaking like crazy over the course of the last few weeks. So Fed speak is not going to drive the market. We've got the beige book on Wednesday afternoon. No big deal, home sales. The focus is going to be earnings, okay? How have the earnings fared? The one other thing that I should mention before I forget to is more technical, so I'm going to get to that in just a second, and it has to do with rotation into small caps. So if I take a look at which companies are announcing earnings, I have a very quick search that I can run. And I'm just simply looking for decent option liquidity. So this is not going to be an all-inclusive list, because I'm looking for stocks with good option liquidity. And I'm looking for projected earnings a day out to 5 days out. This helps me plan my week. Any big companies that are announcing earnings this week? Well, of interest, you'll see Netflix is in here. Morgan Stanley. There's a bank right there, CMA's in the banking industry, AXP, BAC. So the takeaway is that banks are still going to dominate the earnings scene this week. And then we've got a spattering of other companies that are going to be announcing, but there's nothing major to really drive the market. Typically, heading into earnings announcements, especially heading into mega cap tech earnings, there's going to be an okay bid to the market. So I felt that this decline here was a little premature and a little early, simply because earnings season tends to attract buyers. And not until we get to those mega cap tech companies will we really know how those earnings come in or what the market's reaction to those earnings are going to be. Tech stocks have led the charge. I can tell you those earnings are going to have to be phenomenal, because those stocks are trading at very high PE ratios. So they better have some really good guidance, and they should absolutely be littered with comments about how artificial intelligence is going to be growing their profits over the course of the next 2 or 3 years. That type of rhetoric, is it good enough? Will it force a rally into August? I'm skeptical, okay? I don't trade what I think, I trade what I see. And right now, I equate trading oftentimes to a race car driver. We are coming into a turn. Take your foot off of the gas. Wait for the next straightaway. Then you can put your foot back on the gas. So stick with day trading, be flexible, be fluid, consider longs, consider shorts. There are going to be some post-earnings trades for us as well. But in terms of picking a direction on a swing trading basis, you are very vulnerable. Vulnerable either way. I personally tend to believe that as we start getting into August, we're going to hit some seasonal weakness. The reason that I believe that is it's seasonal weakness. There tends to be a lot of fear in August and September, and the fear is oftentimes there's no one minding the shop. The Fed is in recess. Oh my God, what's going to be happening? Is the Fed watching? Do they see this little speed bump in the economic releases? Everyone's looking for a rate cut in September. There's an 80% chance or an 80% odds are priced into the market of a rate cut, quarter point rate cut in September. Same thing that we saw last year. Well, the Fed hasn't signaled that they're ready to cut rates. I don't think they're going to cut rates. We still have very good employment numbers. We've got decent economic growth. Just because inflation is starting to come in does not mean the Fed is going to cut rates. We have a market that's at an all-time high. So there's no panic there. I don't think the Fed has any reason to cut rates. So I don't think that the market's going to get what it wants in September. August and September, market could start worrying that maybe we're not going to get that rate cut. We could also see that earnings come out and they're just not good enough to excite buyers. We've already seen that this is taking place on light volume. Asset managers do not believe that this is their last chance to buy this rally. And that's why the volume has been pretty light. The action we've seen over the course of the last month and a half, it's all been program driven. So that's why you see the light volume. That's when the programs really run. They're constantly testing the bid, constantly testing the ask. That's the environment that they like. So I believe that once we get through those earnings, if we don't see a rally, as mega cap tech goes, so goes the market. And almost the entire market rally has been based on those magnificent 7 stocks, which comprise about 25% of the S&P 500's market cap. If you take a look at the gains this far for 2024, 60% of the gains in the S&P 500 have come from those 7 stocks. Very, very narrowly defined market rally, not particularly healthy. As mega cap goes, so goes the market. Maybe the earnings and the guidance are good, but they're just not good enough to get anybody excited to buy them at these lofty PEs. We also do have a presidential election coming up in November. So could that possibly add to the nervous jitters in August and September? I feel the answer to that is yes. And just like I did not buy into that rally on Friday, I want to see that bid check. I want to evaluate the next market dip. If it's brief and shallow like this, I have no problem buying here. Okay, I have absolutely no problem buying here. And that is going to provide me with an excellent entry point if that plays out. If I start to see something that is more organized like this last August, then I start to get more concerned. So you get this drop, you have some nice shorts in here, you know a bounce is coming because the market's been super strong into that little top. Wait for that lower high double top. Now you've got another opportunity to get short in here. That was a nice meaty move right in there. But you can see the pattern is distinctly different. So if the dip that we have in August, September is brief and shallow with mixed overlapping candles, it's going to set up a great buying opportunity, much better buying opportunity than up here. I won't have any overnight risk exposure, so I can take a deep breath, evaluate, and be ready to strike when the market finds support. If this sell-off turns out to be more organized, I'm going to be shorting. So please heed my warning. Stay flexible right now. Take your foot off the accelerator. We are coming into a turn. And if you think you're going to outsmart the market and that I'm going to just ride out this wave because August and September don't scare me, the market will be going back up in October and November. If you've gone through some of these market pullbacks, like this one, you are scared shitless. And you would have done much better going to the sidelines, being patient, waiting, and then re-enter down here on support. You get this breakout above that downward sloping trend line. Get back in here. Don't put yourself through that, and you'll give yourself a better entry point. Most people, when they start to see this, they eventually, especially in here, they puke out of everything. They just can't take it anymore. This is so much pain. I never thought it would be possible. They puke out of it here, and then the market rallies without them. So if you think that you've got the staying power to weather out something like that, good luck to you. The better play is keep it short term, stick with day trades, wait for the dip, evaluate the dip, and then look for opportunities off of that dip, either to short a lower high or to buy. One of the two. If you watch my videos, I'm going to keep you posted. You're going to know exactly which side to be on. I'm going to mention IWM very briefly because we've had some questions on that. And you can see this is the Russell 2000. Nice breakout through horizontal resistance right here. So this index, a lot of small cap companies. Small cap has not done diddly squat all year. See that? Just sideways price movement. This is the QQQ, so that you have a comparison. That is what the QQQ has done. So you had a little bit of rotation into IWM. Well, what does that mean? Well, that means that mega cap tech stocks, because they've been the strongest show in town, have rallied to the point to where the valuations are getting a little stretched. So you've got some selling pressure coming into QQQ, and it's rotating. That money is rotating into stocks that have done nothing. Sell what's expensive, buy what's cheap. Oh, Pete, so you're telling us that we should buy IWM right now because that's what's going to go up. No, not necessarily. I just see this as a very quick shift that has taken place, and I don't believe you're going to see a lot of money flowing into these stocks. You can trade it on a short-term basis, but you can see on Friday there is a bearish engulfing candle, and I'm expecting IWM to pull right back in. I'm also going to show you a list of bullish stocks from Friday. And the one thing that we always find when we are getting near a market top is that the dogs start barking. What does that mean? That means that all the laggards, all the horrible, horrible stocks that have been extremely weak, out of nowhere, there's a rotation into them. And they actually start looking pretty good. And you get this bounce. It's nothing more than an oversold bounce and some brief rotation into these names. These are stocks in the heavy buying list. These are the stocks that rallied on Friday. So pay close attention to the longer term chart on these stocks, because I'm just going to be flipping through them, and what you're going to see is some nasty stocks in a big downtrend that had one good day, 2 good days. Maybe they'll put a couple of good days together this week, but ultimately those long-term trends will stay intact and they will be good shorts again very shortly. So absolutely, I would be setting alerts so that when those stocks lose their upward momentum, when they lose that bounce, that is going to be a good entry point for those shorts, regardless of what the market does. Because there's already selling pressure in them. So let's take a look at them. And I'm not cherry picking. All right, this stock has had previous support, so it doesn't fit that mold. And it's been sideways, so this is not the type of dog that I'm talking about. CVNA, that's a nice looking chart. This stock has been rallying. But we're going to continue to go through these. Okay, IBM has had a base. I actually like IBM. It looks pretty good. It's filled in this gap. It's above the 100-day moving average. It's above all the major moving averages. Right click, create alert. Tell me when it's got strength relative to the market on a 15-minute basis. I'm just going to set myself an alert because I'd like to know when that happens. And our servers know currently that if it's strong relative to the market on a 15-minute basis, which it would be on a long green candle like that, it's going to wait for it to have relative weakness on 15 and then relative strength. Then I'll get my alert and then I can evaluate the dip. So I'm going to set that. I'm setting alerts on a stock that looks pretty attractive to me on the long side. So let's keep going through the list. Low. Okay, this stock, it's not as doggy as some of them, but you can see it's broken out. This is all okay, not bad. This has been a dog. UPS has been a dog. Look at that sell-off, okay? So it gets a little bit of a bounce in here. Reddit doesn't look too bad. PDD, not horrible. I know as we start getting down the list, this is the DIA, there's IWM. Look, that's a horrible trend right in there. It got a little bit of a bounce. SQ, nasty little downtrend, little bit of a bounce. Etsy, nasty downtrend, little bit of a bounce. RBLX, not bad. I actually like this stock. I was looking at this during the course of the week. I like this breakout right in here. So yeah, I actually like that. I think RBLX, kind of choppy, could continue to move higher. But there are just a lot of very weak stocks that we finally started to see have a little bit of momentum. And that is usually the signs that the market rally is getting a little tired, a little overextended, is when you see the rotation into some of these dogs, then you know the hour is late. So these were good stocks on Friday based on volume and being above the prior day's high. And so, yeah, we've actually seen a decent handful of nice stocks in here as well. But I have noticed that the weakest stocks, the laggards, have been rallying recently. And there aren't going to be that many bearish stocks just because of the nature of the market. The market's making a new all-time high, so you're not going to have a whole lot of nasty stocks that are in a downtrend. So let's take a look. What am I going to do? Okay, so I've got a market that is kind of moving sideways in here. We've seen a little bit of selling pressure. I'm going to be looking for some shorts. Okay, I'm not going to be taking those shorts until I get that breakdown, and probably the market floats higher over the course of the next couple of weeks. If you're going to be long, I would be long AMD, which is a stock I gave you a week ago. I'd be looking at the strongest of the mega cap tech stocks. Okay, those have been leading the charge higher. They're going to continue to lead the charge higher. On the short side, I'm going to give you some picks right now, and we're going to run a couple of searches. And I'm going to go into heavy selling. So I'm going into the bearish search, and I'm going to take a look at what was weak on Friday. So you had Meta trying to break out, hitting some horizontal resistance, and then Friday, it had a nasty little day, but I would need to see it breaking above below this upward sloping trend line here. It's on AVWAP-E. The 100-day moving average is there, the 50-day moving average. I got a lot of things right in here that are going to provide support for it. So no, I wouldn't be shorting Meta. WFC was one of the weaker banks that reported on Friday, and you can see how it is on this horizontal support level right here. It is below the 100-day moving average. Yeah, I definitely would be interested in shorting WFC. Banks had a mixed bag of results. JPM was relatively flat. Citigroup was actually up on Friday. So I think that could be what we see in bank stocks is some of them being weak and some of them actually performing okay. I'm going to put an alert at the low from Friday, because that is a major technical support level. If it can get through the low from Friday and I have any kind of market weakness taking place Monday through Friday this week, Wells Fargo could be a really nice short for me. Take a look at the price action on Friday. Gaps down, does nothing. So we'll see if there's some follow through. That's what I'm going to be watching for. VRT, there's nothing here for me to get excited one way or the other. There's JPM. You can see how it did a whole lot of nothing. Baidu. I like this short. This could be my bearish pick of the day. Why? Remember earlier I was telling you that one of the patterns that we look for, we like consecutive red candles. We like it when they're long, but not overly so to where you just get one or two long red candles and then nothing. This is the type of persistent selling pressure we like to see. Whack, 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 hammer that thing down, can't come up for air. Then all of a sudden this week, massive volume. This is short covering in here. I don't know what the news was. I think they had some kind of news about their automated driving. Chinese stocks in general have been laggards, so you get this blow-off rally in here. And what happened on Friday when the market was up? Long, bearish, engulfing candle, finishes back below the 100-day moving average, never gets to the 200-day moving average, not even close. Got some wicks up here, so we're below the 100-day moving average. We're testing that 50-day moving average right here. End of day, click, click. If the stock can get below the low from Friday, I think it's going to be driven right back down. And we've already seen that type of selling pressure. So I like this pattern. I think this could be a good one. Now, Chinese stocks don't trade in the most orderly fashion. You can see the big chunky choppy movement here. Same thing here. It sells off and then flatlines. So that is one thing that has me cautious, only because it's an ADR. Okay, it's not like a US stock that trades primarily here. It trades overseas as well, and that's when you end up with this kind of choppy, chunky price action. But I do like the fact that you had that bearish engulfing candle, and you can see how option implied volatilities are at 46. If the stock tried to recover that 100-day moving average, and if you could sell an out-of-the-money bearish call spread keying off the 200-day moving average, yep, for sure I would be looking to do that. And I might even go below it, like a 105, 110 bearish call spread that expires before earnings. If I can get $1 for that 5-point call credit spread, I'd be interested. I would take that trade. If I can get anywhere around that 200-day moving average, I absolutely would be all over it. So there you'd be looking at, I believe these only trade in $5 increments. So a 110, 115 bearish call spread for $1. I don't think you're going to see that price, but if it did get there, I'd be interested in it. So like I say, I don't think you're going to get anywhere close to that, but that would give you plenty of breathing room in here, even a downward sloping trend line. So I don't think they announce earnings for about a month. So there is time to do an August normal monthly expiration trade on that if you get any kind of bounce in the stock. But That would be what I would consider a very high probability trade. For me personally, if I get a breakdown below here, how am I going to trade it? Well, I don't need to buy any options on this. I will just day trade the stock and short it on a breakdown. So yeah, I really like that trade. I'm going to put up a search and we'll take a look at what it yields. And this is using our OneOption signal. I want to make sure that on a swing basis I like the stock, so it's got to have a sell signal on a daily basis. I'd like to see some weakness M30, which tells me that the bounce on Friday didn't really have much of an impact on the stock. It's still bearish on a 30-minute basis. I want to make sure the stock is at least above $10. Give me some decent option liquidity in the stock as well. And then let's make sure that we don't have any earnings announcements coming in the next 20 days, just so we can hang on to the position for a little bit. What I don't want to do is, oh, hey, it's got earnings Wednesday, or it's got earnings a week from Wednesday, and now I'm in the position, but I got to get right back out because earnings is coming up. I'd rather be able to ride that position for a little bit. So these are some of the stocks that came up on the list, and I'm going to click through, not many of them because this video is getting a little bit long in the tooth here. So, all right, this is a nasty little decline. You've got some overhead resistance here. Could the stock break down? Yes, it could. This could be a decent little short. I've got nothing going right now. Click GTC. Click on that candle. Click on that candle. There's an upward sloping trend line. If that's breached, I also breach the 200-day and the 100-day moving averages. Okay. Bearish flag formation. Yes, I'd be all over that. That would look good to me. A little bit of a choppy stock though. So it doesn't look horrible. If I see something that I like, I'm going to drop an alert line. I do kind of like this as a short also. CAVA. Earnings, also have to check that. So I've got a chance to maybe do an August regular expiration, maybe sell an out of the money bearish call spread above that price level. That would certainly work. But I like the fact that the stock sold off and now it's testing that 50-day moving average, so it's below a VWAP-E. It's at the 50-day moving average. I would want to see it drop from there. So I'm going to click GTC. I'll click there. If it takes out the low of the day from Friday, I'll know about it and I'll be able to short it. You can see the relative weakness right in here. Why am I so bearish on a chart that looks actually so dang good? Well, you can see this upward sloping trend line, connect that to that, has actually been breached right in here. The stock was not able to recover Friday when we had a pretty doggone good market rally early in the day. Big rally in here for the market. Yay! Market pulls back temporarily. Next leg higher. You would expect a stock to rally hard with that type of price action. What did this stock do? Blam! Never recovers. Okay, that's relative weakness. That tells you there is selling pressure. Restaurant stocks have been very weak. There were some restaurant stocks that bounced on Friday. Right now the consumer is reeling. They don't have a lot of money to spend on food with inflation. Restaurants are plagued with higher wages, higher food costs. Their profit margins are getting squeezed. So they've got higher food costs, higher labor costs. They have to raise their prices on their menu items, and consumers are starting to pull back on their consumption. And Starbucks has been another good short of ours that I've highlighted recently. CAVA is in the restaurant business, I believe, and I better check. Yes, operation of restaurants. Okay, so yeah, I think this sector is relatively weak. If I get a breakdown in here, this stock has run up. I would be a willing seller, and that could be my short play because it's got nice downside. Costco came out. You can see bearish engulfing candle after earnings here below AVWAP-E. My only problem with taking a short in Costco, I'd be willing to do it on a day trading basis. So what I'm going to do is connect a couple of bars here like that one and that low. I'd like to see a breakdown below it. And if I get that on Monday, it's got a chance to get to that 50-day moving average pretty dang easily. Never really recovered on Friday. So remember, early in the day, market up, up, up. The stock sells off and it can't participate in the market rally. Market continued to rally in here, but the stock did not. It had sellers in there. But the reason I wouldn't want to take a swing short on COST is because the company's actually done quite well. And it's a little bit ahead of itself perhaps. Valuations could be a little stretched. You can see into the last earnings announcement, lots of excitement in Costco. Blam with the long red candle. But then the stock finds support. So it may not get a lot of follow through here. We'll see. If it does, fine. I'm perfectly happy to short it. So Costco could be another good short. I'm just going to go down the list, see if I can find a couple others. There's Dell. Energy stocks have been weak. GPS retail has been weak. And LVS, so gamers have been relatively weak. LVS very dependent on China. I've mentioned to you that China, their economic growth is not good. LVS does a ton of business. The vast majority of their revenues are generated in China. Okay, so this is one of the dogs that's bouncing. I think LVS will be a good short. LYFT, that is a bearish drift lower, could not get above AVWAP-E. So it's a $13 stock. It's not going to move very quickly, but I like this short. I like it a lot. I think I'm going to end with Lyft. Lyft looks like a really good short to me. When would I short it? Would I feel comfortable shorting it right now? I think they've got earnings coming up pretty quickly, actually August 13th, so there's a little bit of time here. What would I do with that? Well, I'm going to pick out a candle like that low from Thursday, which is below the low from Friday, and I'm going to set another one right here. So I'll get a couple of alerts. This is going to be a nice stock to short. Nice, steady selling pressure. I have my alerts set, no rebound on Friday. So I think this is a stock that could continue to drift lower. I'm just going to put this back up so you can take a look at some of the other stocks in here that might be of interest to you. But they all look pretty weak. I do like the short on CAVA. I've got an alert for that set as well. If I'm going to be long, I still like AMD and I still like some of the other mega cap tech stocks, which you'd be watching for on mega cap tech. So again, I'm going to appeal to you intuitively. Just visualize this. Just think about this, okay? I'm not even going to look at any of those stocks right now. So you come in Thursday, you get this market that really looks like it's going to go gangbusters to the upside. It gaps up and then it sells off hard the entire day. What type of mega cap tech stock would I want to see? What would be a great tell? Any kind of green candle on Thursday, D1 basis, would be freaking huge. Market goes through a bloodbath, and this mega cap tech stock, not only is it flat, it's up on the day. Okay, well, let's say you don't find any that are up on the day. How about finding one that was barely down? Okay, this is intuitive. Just think about this. It's telling you where the buyers are. Friday, you get a market rally. What would you like to see? I want to see that stock power, power, power higher on Friday. Like there's no tomorrow. Long green candle on Friday. Market sells off on Friday, late in the day. What do I want to see from that stock? Closes on the high of the day. Didn't sell off on Thursday. Runs like mad on Friday. Closes on the freaking high of the day. Buyers are lined up. Before I even look at a chart, I have this in my brain. I know that when I'm flipping charts, that's the price action that I want to see. Okay? If I can't find it, I'm going to find anything that's relatively close to it. We looked at Meta. That's a no-go. Apple, what did that look like? What did Apple look like on Thursday? What did Apple look like on Friday? Huh. Not too bad. Okay. Sells off on Thursday, so I'd like to see better there. It comes back on Friday pretty well. Did it sell off late in the day? Yeah, it did sell off with the market. Okay. But still, not the end of the world. AMZN. Just going to take a look at the really big tech stocks. All right. No interest. Sold off hard Friday. Didn't bounce. All right, so that's not one that I want to look at. And this is the process you would go through. Okay, this is the process that you would go through on every stock that you're looking at when you're flipping charts. Google, sell off, closes. No, that wouldn't do it for me either. Tesla, I believe, sold off. It had some news. So that's the kind of thing that you're going to be doing, is just flipping through these charts and looking for what held up well on Thursday, which Google did sell off. I thought that was Thursday. So Google sold off both days. That would not be one. We're seeing a rotation out of tech stocks right now and into the small caps. So most of the tech stocks would have been a little bit on the weak side, some weaker than others. Nvidia, of course, everybody likes to look at Nvidia. So there's another bearish engulfing candle. So I'd continue to look until I found a stock that was barely down on Thursday and that had a nice rally on Friday and that really didn't see much in the way of weakness late Friday. It was able to shrug off that little bit of market selling. Those are going to be your best prospects. Those are going to be the stocks that you want to day trade from the long side. Thanks so much for watching, everyone. I'm not going to be doing a live event on Wednesday. I'm going to be doing a recording, and my suspicion is that I'm going to wait about 30 to 45 minutes into trading on Wednesday. I'll be able to go through, give you some market analysis. We're going to take a look at the picks that we have recently made, and then I'm going to be finding new picks Wednesday. I hope to have you aboard for it. Watch for that video. Subscribe to the YouTube channel. If you like the content, please subscribe to my YouTube channel. It helps the channel out, and that's how I can reach even more traders. So I'm trying to educate you. I'm trying to help you understand all the forces that are in play when it comes to the market, and then I'm trying to help you find those stocks with relative strength and relative weakness. Thanks so much for watching. We will see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.